Hi all, hi traders, welcome to TCM Education. In this video we want to discuss the fate of day traders, our fate when the S&P is looking like the S&P that you see in front of you. So that's the S&P 500 yesterday, July 8, and as you can see we started the trading day pretty much at the 620.50 level, give or take a couple of cents, and we closed at 620.34 level. So basically over 6.5 hours all we did is move down from that level, let's say $1 to 619.54.45, and moved up maybe a little more than $1 to 622.11, and that was for a very brief movement because as you can see the move over 622 was immediately rejected. So basically 6.5 hours, no break, no trend. I'm not going to talk about the volume, no hint. I mean, is it possible that at one point the S&P will spike up and move higher, or move down aggressively? Obviously on a news driven move. Yesterday we had zero news on the agenda, zero earnings on the agenda. Trump was relatively quiet. Elon Musk was relatively quiet, at least for 24 hours, and that's the outcome. So what do you do? First of all, let's take a look at the leading ETFs and see what happened over there. And there is a clue, there is something. There's always something, but yesterday it was more substantial. Take a look at the leading ETF here on my watch list, and you can see that the energy sector, the symbol is XLE, well, closed up 2.6%, and this is when the S&P is flat. So that's a big difference. On the negative side, we had the clean energy ETF down 1.22. But there's a big difference between 122 down to nearly 2.7 up, because when the sector is up 2.7, it means that some stocks from this sector are up 4, maybe 5, maybe 6. So there is a chance to find strength in individual stocks in the sector. Now let's take a look at the price action of the sector, how it was actually built. And if we see, actually we see something very nice that doesn't happen very often. A trend that opens basically in the sector at the open and continues basically until nearly 2 p.m. So basically 4.5 hours of upside in the energy sector. That means to day traders one thing. Okay, first of all, you need to know which is the best performing sector, if this is your strategy. And we obviously are looking for other strategies, but this is a legit intraday strategy. Look for the best sector, and then look for the best stocks in the best sector, and then look for the entry point in those best stocks in the best sector. So let's follow up on that. So it's clear that the trend that goes on for such a long period of time is interesting. So on one hand, if you get on board very early, you have your day cut out for you, because this is a move that can yield 4 or 5% on an individual stock. It yielded here like 2% plus on the sector. So individual stocks can deliver way better results. And we know that the energy sector is loaded with stocks. Let's see, we'll see in a minute which. Okay? But again, you need to observe it very early, and this is not very easy to observe early because let's face it, in the first hour or by 11, the sector is up from, let's see, from 86 and by 11 it is at 87. So that's 3%. 3% in the sector. You know what? when it overall was 2.7. Actually, it's less than 3%. It's 2%. Again, not very easy to observe, but really stands out versus the performance or a dismal performance of the S&P 500. So now the options are: you follow the strongest sector if you can observe it, or you look for the strongest stocks, which are plenty, but it's a mess of them, and the result can be very, very different. Okay, if you find one good stock with the right timing, your day is made for you. However, which stock? What is the process here? Because there are so many stocks that are moving up and down, and some stocks are gapping up in the morning. They are great trading candidates, and because the S&P 500 is not supporting anything, some of them will actually fail on the continuation higher, and you go look for the best trades in the best stocks, and those are going to be failures. While this trend, which lasts 4 hours, it's not a guarantee for a big win, but it's most likely a guarantee for a win. So if you use the 1% risk strategy on a stock in this sector, you have a very good chance that you're going to end up with a winner. Not a big winner, okay, it's not going to be a 10% winner, but it can be a winner, like 3%, maybe 4%. We'll see in a minute. So that comes out of analyzing the sectors, and this is obviously a lucky break, because normally the trend is not that strong and that clean. There are various ways where a stock or an ETF can gain 2% and look way tougher to trade than this one. This one was, especially if you entered early. So that's regarding the energy ETF. Now let's go back to the spider. Remember this price action. This is the 5-minute S&P. Now let's move to individual stocks, like the most important stocks, the big names. Yesterday, obviously we're not looking at stocks at 5-minute bars. We're looking at 3, sometimes in the morning at 1, but let's go forward. So if we look here at individual stocks, and I have here a list of the best of the best, starting with Alibaba, Tesla, Nvidia, Oracle, Palantir, and many others. All of those stocks are the $1 trillion stocks are in here, most of them. If not all of them, but most of them. So we have Nvidia, we have Meta, we have Apple, Microsoft, Amazon, JP Morgan, Nike, and Tesla. So let's take a look. What happened with Alibaba? Take a look at Alibaba. Other than the gap, how tough was it to make a good trade? When I say a good trade, I mean a 1% trade, risking half of that. 1% in Alibaba is $1. So again, analyze this chart from top to bottom. The stock trades from 108 to 109. Okay, it's impossible. Now I see that even this 1% intraday on a stock is in this case impossible, because I'm looking at the range. Highs 109.18 as posted, lows 108, give or take. So there is no possibility here to make any good trades. Let's look at Tesla. Okay, so Tesla. If we compile the moves sideways, I think that covers most of the trading day. Then it drops at the close for whatever reason, totally uncharacteristic, and without any market support. So again, maybe it's Elon Musk saying something inappropriate or something. The only good move that could have been, I don't know, traded, and I'm not taking into account this breakout here in the morning, which was for 1% from 300 to 304, so a little more than 1%, and it stayed there for a split second before coming back all the way down immediately, was this VWAP reversal, where you can see that the stock is basically almost 1, 2, 3, 4, 5, yeah, 15 minutes hovering exactly at the VWAP, and then it's moving up with very little risk if you observe it. So that's one trade where you have a risk of less than $1 here, which is 1/3. Yeah, let's see, 301, and the bottom is yeah, 50 cents. Let's call it $1 because there are some spreads and some slippage. $1 of risk, which is 1/3 of 1%, and that yielded a move of from 301 to 303. So $2 versus. Okay, so you understand that it's assuming again that you observe and you are at the right time and you can buy it here. And again the reward is 2 to 1 at best. Not even, it cannot be 2 to 1. That's the optimal. If you sell it at the top of this week and then it crashes immediately after on some news. Obviously there was a pickup in volume, but again, and I can go down the list, but those are the best performers. Let's take a look at the middle of the bunch. If you look at Apple, go figure this chart out, or Microsoft, even worse, terrible. So these are the type of charts where your chances of losing money, if you don't understand that you cannot trade them, is immense. Now, there are a couple of stocks here that we can discuss. And we talked about them early in the morning yesterday because it stood out as weak versus the market. The consumer stocks like Walmart, Amazon, and Nike. Let's take a look at the worst performing stock yesterday. So what happened in Nike? Again, early in the morning, a move down, and then the stock moved sideways for since 6 hours. So from 10 to 4 p.m. it moves sideways. It doesn't break the lows anymore. However, if we're looking at hints and VWAP trades, this one was a good trade. I have to say that if you observe, and there was plenty of time in this case to observe this, any move to the VWAP was rejected. Again, nothing spectacular. I mean, those are trades of 40-50 cents, risking half of that on average. So that's 2 to 1. If you're not going to get 3 to 1 in terms of risk reward here, and shameful because any move lower was basically rebuffed. And again, why is that? The S&P 500 did not deliver anything for stocks yesterday. So that's Nike, which was down basically only because of the early morning move. So was there a money trade in this stock? Highly, I can say highly unlikely. Again, unless you were focused from the morning on Nike, and you could have observed this bear flag formation here. But there are so many, and again, no news. Assuming there were no news or a downgrade in Nike, maybe there was. I didn't see anything. Okay, let's move to the second weakest stock, JP Morgan. Gap down and go, another bear flag. You know what? Again, if you focus on JP, focus is king here. There was a potential trade here for from 286 to 280. That's $6. That's 2%. And this is only if you hold it for 2 hours, sell it exactly at 280.50 or something. If it starts moving higher to the VWAP, then you have a 1% winner. And the risk was, let's see, the risk was the risk was a little bit more than 0.5%. So 0.5% of risk, 2% winner, that's 4 to 1. How many good entries here? Maybe one. Maybe there was another one. Very tough though to leave everything and start focusing in the morning on a stock that normally is not a great intraday mover. Okay, so going short, JP Morgan, how often would we lately been, looking at this one? I'm looking at Nvidia when semiconductors are weak, to look for a potential bear flag formation and potentially look for an entry there. But JP Morgan is not our cup of tea most of the time, and Walmart and Amazon were also weak. So Walmart started with a minor gap down, so it wasn't on the list. It was on the list once it dropped from 99 to 98. So this is already here at 10:30 in the morning, and still delivered a nice move lower, and that was pretty much it. Until another reversal late in the day for 0.5%, give or take. So again, you can see the performance that you can deliver from these trades is limited to 1% pretty much, and the risks 0.25% to 0.5%. So again, the risk reward in these trades is nothing compared to when you go and trade what we call the smart trading plays. However, you'll see in a minute that the smart trading plays had also their issues yesterday. Okay, so if we want to recap, I still owe you guys a recap of energy stocks. We'll do it in a minute. Energy stocks, why? Again, because of the energy sector. So let's do it and then we'll go to the real movers. So what are the energy stocks, the big names? Let's start with ExxonMobil. ExxonMobil is the biggest name in the sector, and it's going to look exactly like the XLE. Guess what? If you picked up fast that the energy sector is winning, there were good trades here. No, not spectacular in terms of percentage, but very good moves in terms of risk reward. Because this stock, despite being a $100+ is very, very thick. You can trade it with very, very tight stop losses, which means very little risk compared to big tag stocks. So this one, and again, where was a good entry? I'm looking let's say above this bull flag formation here in the morning at 10 o'clock, assuming you see it that early. Because if you don't see that early, maybe there's one trade left here, this 113 reversal from the view up. And again, it's great when a stock moves up like this, but there are no pullbacks. So if you miss on the move and you're waiting for a pullback and it's not happening, then you miss. Okay, so there are two potential entries that I see. Maybe actually there are way more, but two potential. This bull flag formation based on 1, 2, 3, 4, 5, 6, like 20-minute consolidation at the highs of the day with very little risk. 112.60 versus 112.30. So that's 30 cents of risk. That's a 0.25%. And the stock delivers to the close $1.50, which is in this case, how much is it? 1%. So 4 to 1 in terms of risk reward. You know what? It's not bad. Not bad. 4 to 1. It's good. Okay. Again, you have to adjust to this type of concept where you stick until the close. This is we talked about this strategy, and those who can implement it, I think, will be winners in this market, in any day trading market. Because again, we are day trading this stock. We're not like doing anything else. Day trading the best stocks in the best sector. So that's ExxonMobil. Let's take a look at another stock. Let's go to ConocoPhillips, COP. I'm just picking up random names from the sector. Those are leading stocks. And again, wow, the same scenario, moving up, pulling back. This one didn't close at the highs like XOM. Pretty much the same scenario. Now risk is 0.5%. Again, I think the best trading stock in the sector is ExxonMobil, but there are plenty. This one is also a nice one. Let's go to a stock that I saw in one of the scanners, MUR, that's Murphy Oil. It's not a big tag name. So you can see this stock starts trading and goes straight up from 24 to 26. That's nice. 24, 26, that's $2, that's 10%. This move is worth nearly, yeah, 24, 26, nearly 10%, a little bit less than 10%. Now, can you get on board on this move without waiting for a pullback? I myself would have said no. Wait for a pullback, or at least for a consolidation or a clear entry point, because you expect a move lower at one point, and it's not happening. So it's happening only after it's been rejected at 26, pretty much 25.9. So again, if you are not taking advantage of this 9:30 to 11 move, you'd better not be trading Murphy. Okay, I think this is good enough for this video. We'll do another video in a bit about the rest of the market. Just wanted to make a point about how stingy the market was yesterday, how important was to observe as early as possible the strength in one particular sector, that was energy. And if you pick up on that nuance and you observe the sector, and of course it's very easy to decipher the sector based on its leading stocks. Anybody that day trades must have a list of 2 or 3 stocks that are leading in the sector. Obviously Murphy Oil is not leading in the sector, but ExxonMobil is leading, and Chevron is leading, and ConocoPhillips is leading, and maybe Apache is leading. That's a concept where you can find nothing great, but you can find good trades that are legitimate target for day traders, where you don't have to take the 1% risk. Here you can take way lesser risk. That's a benefit. You take way lesser risk. You don't expect to get 5%. I mean, you can expect to get 10, but let's be realistic. A 3-4 to 1 is a huge win in these cases. Okay, guys, thanks for being here with this video. Do like, share, subscribe, and talk about this video with your day trading friends. We'll see you in the next one.